Hey there everyone, this is Joe from Bullion Now here with another precious metals technical analysis video. We're doing silver this week. Now last week we did gold. It was our very first episode in the series of technical analysis videos. We started off with gold, of course, took a bit of a more of a macro view of where gold is and where it could potentially go in the future. So we're going to do the same with silver this week, and then every week after that we will then start to get in tighter to more the weekly and the daily time frames. But of course, head over to bullionnow.com.au for all your best bullion bars, gold and silver coins as well. Of course, come and visit us here in Melbourne in Australia. Give us a call on that number right there within Australia, or if you're international or you just want to email us, sales@bullionnow.com.au. We have everything you need at the best prices with the best shipping rates. Okay, straight on to silver, our favorite precious metal here at Bullion Now. Again, just taking a quick look at the very macro view, and then as the weeks and months and years go by, we'll do more sort of weekly and daily specific. So let me just get rid of that. Of course, we're using the tradingview.com chart. It's the silver priced in US dollars. There's no reason to use any other denomination. This is what we all know when we talk about spot price. So currently we have it sitting at $15.36 cents in spot price of US dollars, and this chart goes all the way back to 1997, so it does include that wonderful month, or maybe 2 weeks, 3 weeks or so, where you could get silver right here at about $4 US. Don't you wish you had have known about it then? Oh my God, I wish I had. Maybe you did, and if you did, hey, congratulations to you. But from the low of $4 all the way up till that heady day back in 2011 when it reached the top of around about $50 US. That was a pretty cool day as well. Hopefully you sold out here. Hey, hopefully you bought here. Hopefully you sold here. Most of us didn't, but some kind of version of that. But here's where we are now. Obviously, we've been in that bear market for quite a while. I would consider it potentially more a consolidation through time at the moment, but we do need to see a few certain things in order to break out of this bear market as such, and then call it a bull market once again, in my opinion. Now, of course, anything I say today is my own personal opinion as an employee of Bullion Now, but my opinion does not reflect the opinion of the owners of Bullion Now or anything like that. So it's just what I'm doing, what I personally see. So you take everything I say with a grain of salt. So let's have a quick look at some sort of main trend lines. And what I'll basically do is I'll take a look and I'll give you my personal opinion as to where the price may head if the price was going to go lower, and where the price may head, certain resistance points, if the price goes higher from here. I promise you I will never give you a prediction as to where the price will definitely go within a definite time frame, except for, all I will say is that my personal opinion is that silver will be going higher in the long term. And that's pretty much all I'll say, of course, because I'm invested in the metals just like you. So let's take a look at some key trend lines, I think. So probably the first one I would say would be this downtrend line from the high of $50, and let's see what main trend lines we may have broken through. Well, as you can see there, we've definitely broken through that downtrend line right there. No need for me to even leave that there. I'll just move on to the next one. The next key high right here was at about $21. So if I pop the trend line in through there, let's see where that goes through. And let's pop that there. Okay, as you can clearly see, and we'll punch in a little bit further, a little bit closer. As you can see, we definitely broke out of that trend line, which is a good sign. We did then break down below. We tried to break further down, but oftentimes from a failed move, let me get in even further. Oftentimes from a failed move down comes a fast move in the opposite direction. That's what we saw. So it broke back up past this downtrend line, and we're currently hovering above it. So I would imagine, and of course this is my own opinion, and I of course could be wrong. Let me pop into the weekly time frame instead of the monthly. I would imagine if we were to see prices go lower from here, you would potentially see this trend line as an area of support. So wherever that may be, but let's say, for example, if silver was to come down, and I'm not saying this is going to happen at all, but if it was to come down, past this point here, this would be the first area of support right here at about $14 US. But if it was to come past here in, say, towards the half of this year, towards the sort of the end of June, you could potentially see this trend line as a level of support. Breaking down from there, if we continue, if we go into a full-on bear market again, let's see what the other areas of support are. Again, I'm not saying the prices are going to go down at all, I'm not saying that at all, but just in case, let's look at the other areas, of support. So we have that area there of $14 roughly, and then this trend line right here, as I said, that could be an area that it bounces off. And breaking through this trend line significantly, well, we need to look at where the next major levels of resistance might be. Let's pop in a horizontal line there. Does any particular prices line up? Well, here's one right here, potentially. You see that area right here and that area right here. So pop in a line there, and that's at about approximately $12 roughly. That could be a slight area of support. Breaking down from there, are there any major prices? Maybe here and here, but look, you're probably looking definitely, as you can see, right there, that horizontal line, which I'll pop in right there, of your $8.50 mark. So that's kind of the two major ones. Absolutely not saying at all that we're in a bear market and we're going to go down from here and they're going to definitely be hit. I'm just saying, just in case it is, that could be your major areas of support. Right here at, again, about $12 US, and again at about $8.50 US. I'm still just going to leave this at the macro view right now. I'm not going to look at the dailies and the weeklies as such. So let's have a look at the levels of resistance going up, of course, and we'll just stick with the lines for now, and then I'll do a little bit of Fibonacci analysis too. So let's have a look at above here, where are some major levels of resistance, and what you're looking for is areas where it's touched numerous times over a long-term time frame. So if we're here right now, as you can see, actually here, that's an old level of support right there. So we're kind of hovering at that level of support right there, if you can see that. But anyway, moving up from here, where are we looking at? Probably around here, if you can see right in there. Let me see if I can punch in a bit further. You can see about here, we've had a test right there. It's about $18.50. You have another level there of $18.50. You've also got this level of support here, 1, 2, 3. So around about this level, let's look, 1, 2, 3, 4, 5 right there. That's definitely worth a line, a horizontal line to pop in right there. That could definitely be a level of resistance as we go up, or if we go up from here, or anytime, even if it goes down and then comes back up, you would see this potentially as a level of resistance at approximately $18.50 roughly in US dollars. The next level up from there, you could definitely see it already. It's that spike that we had up to $21 would be another level of resistance right there. And that does coincide with this little spike right here, and it coincides with this spike up here. So definitely another level of resistance at around about $21 US, $21.20 moving up. Moving up higher, of course, you can definitely see this level right here at $25, and not much above there. You've got a few spikes down at that level right there of about $26. So there you kind of major levels of resistance going up, and I've already shown you my opinion about the major levels going down. Let's get rid of those for a second, and now actually no, we'll keep them in, and what I'll do is I will pop in the Fibonacci analysis, and I'll see where these lines may intersect with Fibonacci analysis. So if you're not familiar with Fibonacci, I'd suggest you do your own research, of course. I personally find it a very good tool for predicting where prices could go. So Fibonacci retracement. So we'll take it from the low. This is the very macro view. So the very low of $4 back in was it 2001, I think it was, all the way up to the high of $50 US. And let's see, do they coincide with any particular levels? Well, I can see a couple right here, or pretty close to. So what I can see here, particularly this 61.8 level. Now I understand it's getting pretty liney, for want of a better term. So I will remove these in a second just so it's not as jumbled. But what you can see here is definitely this line right here. Get rid of that. The 61.8 level, and that's hovering at about $21.50. So it's the 61.8% level retracement. Not retracement, sorry, that's the 0 and that's the 1. So the 61.8 Fibonacci level at $21.50, and that does intersect very closely to this horizontal line we just drew in of $21.20. So when you see two indicators, using two different indicators, and they get you to close to the same price, you can bet pretty well that would be a definite area of resistance. So, and it makes sense too, because it's the peak right here. So definitely if we tend to, or if we do sail through these other levels of resistance at the $17 and $18.60 level, you can see this one here is going to be the main level of resistance for sure, because we have two indicators, horizontal line, which went through a couple of different, the price went through it a couple of times throughout time as you can see, and the 61.8 Fibonacci level right there. And the next one I can see, if you can see it right here, is the 50% Fibonacci level. Let me punch that in right here, which is pretty close to this horizontal line at $26.30 roughly, and that's Fibonacci is at about $26.90. So around that kind of level, I think, is where you could expect another area of resistance. So right here, let me get this tool. I'll do this one right here. So right about here and right about here are your major areas, in my opinion, of course. None of this is financial advice. The next major areas of resistance, if and when we continue our climb up, hopefully to break the all-time high. So I've given you my opinion on where I think the price may go in the long term. Potentially, if it goes down, those levels of support and these levels of resistance. And moving up from there, of course, you've got this level right here. I should mention, of course, the old dead cat bounce level of approximately $35. And of course, then you've got the major resistance there at 50. Let's talk lastly, and I'll get rid of all this. Let's just blue sky think for a second. Let's assume that the price is in a bull market. Not that I'm telling anybody that it is, of course, but let's just assume it is for a second. You know what, I could just erase all the things, but I'll just do that. Let me do that. Just give me 1 second. Let's just assume that we're blue sky thinking for a second. Where could the price go to after the all-time high of 50 is hit? Now, I think that will happen eventually. I'm not giving you any kind of time frame, and of course, that's not financial advice, as I said before. But let's do some more Fibonacci analysis, but we'll just do it in the opposite direction. So instead of calculating it, instead of starting it from the low to the high, we'll go from the high to the low. Now, let me just get that right there. So we'll take it from the high and the low all the way down. And what this does is it gives us the Fibonacci extensions right here. So what we'll do is we'll give us the Fibonacci extensions from, again, the low and the high. So one of the most key Fibonacci extension levels is the 1.6 618 level. Again, calculated from this low and this high, and we have the level here at approximately, if I can get in a little closer, approximately $78 roughly. So potentially that could be the next area of resistance after we break through an all-time high. Again, I'm not saying when that is, of course, because I'm not giving you any kind of financial advice. And the next level after that, if we were, for example, and this is just, again, blue sky thinking, and it's not any kind of prediction at all. But if, for example, we realized, we were in a bull market. Let me do the brush right here. That's better. If we knew we were in a bull market, and we're coming up, this isn't any indication of time frame, of course. That could be a level of resistance right there when we could come back to, touch the all-time high and then back up potentially to the 2.618 or even the 4.236 level. So again, that's just very crude drawing. And again, I'm not saying that is how the price is going to go. But what you do tend to find is when you do break an all-time high, it does tend to go to one of these levels right here. So either the 1.618, potentially the 2.618 right here, or even the 4.236. Of course, though, don't forget, you do have psychological values as well. So after the 75 level, you'd be looking, of course, at the $100 psychological value. So there are some major resistance points going up, and of course I just did mention before the levels going down, and just skip back to the start of the video for the levels for support. I'm going to keep it at that, short and sharp. Hopefully, I hope you enjoyed. Of course, we will be doing regular precious metals technical analysis videos. Next week, I'm going to have a look at palladium, because we did have a commenter on this video right here ask for palladium, but I just did want to get to silver first because they're the two big boys within the precious metals markets. But next week, probably on Thursday or Friday, you'll receive a palladium price technical analysis. Now, don't forget to hit the big red subscribe button right here. Why? Well, because of the technical analysis videos, our weekly auctions where we auction off excellent items for sometimes really great prices. And of course, we do unboxing videos. Here's our recent unboxing of the Perth Mint Homer Simpson 1 ounce proof coin, available for sale, of course. And we do store updates as well. And of course, we do YouTube subscriber only specials. So you do want to check out our YouTube page. You do want to subscribe, because sometimes you may only get specials for YouTube subscribers only. Hope that made sense. That is it, gang. Stay safe, and we'll speak to you soon.